The Ocean City market is behaving very differently than most people expected, myself included. Despite mortgage rates staying pretty elevated, among other things, there are a few reasons why. I want to get into that today. Now, before we dive in, people just like you are reaching out to me to help them through this process because in a time such as this, where there is nuance to the market, where every segment is moving and reacting a little bit differently, expertise can make the difference. So if you would like to discuss your unique situation, because everybody's situation is different, feel free to reach out any of the ways you see down in the description. Now, the first thing I want to talk through with you is inventory. So I've been tracking that very closely over the last several years, and I want to be very, very clear. And I've hit on this every single year. Unless we see inventory meaningfully above 300 active homes on the market, I don't expect prices to react across the board in a way that buyers have been hoping for years. Historically, pre-pandemic, it was normal for inventory to be 400, 500 plus homes. We haven't touched 300 active homes on the market in years. We have consistently been in the low to mid 200s range. We are sitting at about 260 right now as I record this. And even though that is about 10% higher than we were the same time last year, that's not meaningfully different enough for prices to react accordingly. They continue to find support in many different segments, not across the board. And we want to get to that in a minute. But the reality is, the market has slowed down in volume. In some cases, it's slowed down in speed, but it's never really fully normalized the way it used to be. And I don't expect that to actually happen. Now, supply is one side, and we'll get to the demand side in a minute, but let's stay on supply. Why hasn't inventory changed? And why do I not think it will change meaningfully anytime soon? So over the past 7, 8+ years, right, as this market has transitioned, and if you live here full time, you've seen it. If you are a vacationer, you've seen it. Everybody's seen the change. Not only have home prices gone upwards, but a new buyer segment really has been drawn into the market over the last decade, and that is more strict investors, people who have leveraged these short-term rental models effectively. What used to be a heavily 1 week Saturday to Saturday market, and don't get me wrong, there's still a lot of that in place. Most of it is that. But we have people who have rightfully seen the investment potential of these properties we have here, and they have leveraged them accordingly in less than week rentals during the summer, specifically leveraging the weekend to fill the holes that a lot of the condos and B&Bs that have closed over the years have left. So that demand has to be met somehow, and that has been encapsulated by more people who are investment minded. Now, don't hear that and think we have BlackRock and all these big companies coming in and buying up homes to invest. That's not the case. But it is another buyer segment that is less sensitive to economic changes than people may have been in the past when these were just strictly second homes. So if there is pressure, if rates do rise, if economic uncertainty increases, there's less volatility. There's less people that say, "Hey, I'm going to put my home on the market and make my exit," which I think is why we haven't seen that many homes coming on. Now, again, this year we have seen more. We have had more new listings to this point in the year than we did last year, which is a good thing to see. And we've seen homes going under contract accordingly. But the demand side, again, is just as nuanced and a little bit odd. So we've seen buyers become more selective, more cautious than we had in that 3-year span of 2020 to 2022 when mortgage rates were very low. And people rightfully locked in whatever home they could at a discount rate of 2 to 3% for a mortgage. And now we've seen a lot more cash buyers coming into play. And if you don't have a mortgage, you are less likely to have pressure to sell. You have a million other options as far as leveraging that equity. If times do get tough, you don't have to push the eject button. People are not overextending like maybe they once were to afford these second homes. I'm not saying that some people aren't, but it's not, again, a meaningful enough size of the population to where any real outside pressure is going to change inventory meaningfully and therefore isn't going to change pricing meaningfully the way that buyers want. Now, I want to take a quick minute to talk through the two different segments and how they moved a little bit differently lately. So single families were on a very strong run throughout the end of last year and the beginning of this year. They're starting to normalize with days on market heading back upwards. Prices continue to rise as a result of new construction and larger homes being built, but older homes are having a tougher time. And now there is this fine line between the development potential and what the land is worth. and what the out sale is worth. And a few homes that I'm seeing and tracking personally seem to be kind of caught in the middle within a couple $100,000 gap where developers aren't quite there, but an end user isn't quite there either, right? Somebody who doesn't see the value in a 1930, 1940 home that needs work. So it's interesting watching that play out. And again, within that single family market, you have the higher end that continues to move, albeit slowly, but there's more selection. It's brought in a lot of different kinds of buyers who we traditionally would believe to be pursuing in Avalon and Stone Harbor have looked at Ocean City as an affordable alternative. You know, your $10 million goes a whole lot further here than it does down in Avalon and Stone Harbor. So that segment does still move. There is more inventory coming there. And as a result, again, that's dragging the days on market up a bit. Condos are still humming along. That has been the steady eddy for the last 4 years, consistently with all metrics, no matter how we look at it. Condos are still doing very, very well. That is the segment where I've still seen multiple offers on a semi-frequent occasion this spring. But now, as Memorial Day approaches, that is likely to start slowing down as well. So, what does all of this mean for you? If you are sensitive from a mortgage rate standpoint, that is okay. That should not preclude you from exploring and educating yourself. In the meantime, if you're waiting for rates to come down a half a point, a full percentage point, we don't know if and when that's going to happen. But understanding how far your money can go, what that can get you is important, even if it is a bit before you're actually ready to pull the trigger. So if you are looking to buy, and again, you're rate sensitive, that is one thing I would highly advise is start looking and browsing routinely so that you can get familiar with what your monthly payment would be, how much house that is going to get you, and does it actually solve what you're looking for here in Ocean City? I've had a lot of buyers reach out that are so focused on that monthly number and waiting for it to get to a certain point that once it does, they realize, wait a second, they're going to have to spend more than they intended anyway to actually get a home that would work for them, right? They've spent months, potentially years agonizing over this decision only for it to go nowhere. So I don't want that to be you, right? Our time and mental energy, we only have so much of it. So I would highly recommend, again, reaching out, getting educated sooner than later so you know what is possible. If you are looking to buy and pay in cash, obviously you have more flexibility here. 9 times out of 10, your best deals are going to be on homes that close towards the end of the year. But I will tell you, there are options that may come up over the coming month or two where owners want this last summer before they are willing to sell and close. You may see these homes start to hit the market, and you may be able to get it for an attractive price for allowing the owner to have that one more season. So if being here for this summer isn't super critical for you, and to be honest, we're kind of at that line where it's not possible for you to be here for the whole summer anyway, it's worth considering that as a possible path. Now, if you're considering selling, again, this is not necessarily the time to do that. Obviously, we're still going to have plenty of homes coming on the market. A lot of folks who do end up selling are waiting to find what they want to buy as a replacement property first, and we can't control when that comes, but we have to be ready for it. So in order for you to be fully prepared, again, getting educated about what the home is worth today in today's market will help you get one concrete piece of data to help you project forward to that next step so that you are, again, ready and confident to jump when the right opportunity does arise. The last thing you want to do is have this number in your head, whether it's you saw it on Zillow or you had somebody give you an estimate a year and a half ago, and play that forward, and that is not going to serve you best. You may be missing out on opportunities if your home has gone up in value, right? You may have capped your budget somewhere and said, we can't afford that home. The reality is you could, now that your home is worth more as well. Again, I'm a big believer in up-to-date information and staying aware of what's on the market because these opportunities in low inventory environments don't come up frequently. And sometimes a couple days makes all the difference. So with that said, I hope you found this helpful. Any questions you have, don't hesitate to reach out or drop them down in the comments. But thank you, as always, for hanging out with me. I'll see you next time.